in today's episode, I want to talk about a particular IRS notice that addresses underreported income. You see, with the One Big Beautiful Bill passing this past July, there are a lot of pop-up preparers who have not educated themselves on how to properly account for these new credits and deductions that we have, such as the enhanced senior deduction, the things like no tax on tips, no tax on overtime.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 78 of the Tax Relief with Timalyn Bowens podcast. We are about 2 weeks and some change into the tax season, and I hope that it's going smoothly for you. But in today's episode, I want to talk about a particular IRS notice that addresses underreported income. You see, with the One Big Beautiful Bill passing this past July, there are a lot of pop-up preparers who have not educated themselves on how to properly account for these new credits and deductions that we have, such as the enhanced senior deduction, the things like no tax on tips, no tax on overtime. And those things are going to be used to intrigue you as the taxpayer to come into their businesses. And what's going to happen is fraudulent tax returns will be prepared. And when that happens, the IRS may catch it within one of the systems that they have to review returns, and they will issue an IRS Notice CP2000. So that's what we're going to talk about in today's episode. What is an IRS Notice CP2000? After we talk about what it is, we're going to also talk about what you should do if you receive one. Okay, so let's get right into it. The CP2000 is different than a CP14, the notice that we've talked about quite a few episodes ago, but the CP14 is a notice of demand for payment. The CP2000 is an inquiry that the IRS is making to let you know that something wasn't reported on your tax return. Okay? So with this inquiry, they're also making a proposal to adjust your tax return. So again, to be clear, this is not a final bill. This also is not an audit. What has happened is when your return came in and they began processing it, they ran it up against things that were reported by third parties. So if you have W-2s from an employer, they're going to check the line for W-2 income against what was reported on your behalf. Same thing with 1099s, or if you have interest income. If you thought you were trading crypto and it wasn't going to be reported, guess what? It's reported in that third party system. And again, I know people will be absolute here. It depends on how you're trading, right? And those reporting requirements. But if the IRS notices some discrepancies there, that's why they issue the CP2000 to make sure that you are aware of this. Now, I also want to point out that unless you have somebody on as a power of attorney for your tax account with the IRS, your preparer is not going to receive a copy of this notice. Okay? They only receive a copy if they are your power of attorney, not marked as your third party designee. A lot of taxpayers I've talked to are like, well, my tax professional should have this as well. I check the box for them to be the third party designee. And that gives them permission to talk about this return, but not to receive notices on your behalf the same way Form 2848 does when they're your power of attorney. Okay? So now that we have that out of the way, like I said, this notice is to address discrepancies. So this could be in between income that's reported and what they have third party. It could be a discrepancy between payments received. So we have a pay as you go tax system. If you're working for an employer, you already know they're hitting you hard, withholding taxes for you based on how you filled out your W 4. Well, sometimes a CP2000 could be in your favor because maybe when you prepare the tax return, you don't have all of the payments or taxes withheld reported on the return. In that event, you would get a CP2000 notice letting you know that, hey, maybe you don't owe as much as what's showing on the return because all of the payments that they have on record for that year aren't showing on the return. But the majority of CP2000s I have seen in my limited 15, 16 years in the business are underreporting of income, okay? Which could result again in a W 2 missing or another income document. Or unfortunately, where a lot of fraud comes in is when taxpayers and tax professionals inflate certain credits and deductions in an effort to reduce the tax liability. And they inflate them because you know if you don't have a business, you shouldn't have business expenses on the return, right? That's tax fraud, which leads to tax evasion. Okay. So, yes, common causes can be underreported interests. Like I said, the dividends, stock sales. We have to make sure that Social Security, while it may not all be taxed, it still has to be reported because for a lot of taxpayers, a portion of that is going to be taxable. I had a client about 5 years ago who received a CP2000 because their daughter was preparing their taxes, and the daughter thought that Social Security was not taxable at all. So it was not on the tax return, which resulted in the CP2000. Then the mom also got an accuracy related penalty, which is 20% of what wasn't reported, right? And I'm sorry, that tax. But that's a silly penalty that can be avoided if we make sure that when you are preparing your taxes, you are reporting everything and then only claiming credits and deductions that you have the right to claim. If you know you're not eligible for the fuel credit, don't let a tax professional, quote unquote, professional say, hey, I can get you more money and put the fuel credit. If you know you don't have children in your home or that you're taking care of, don't let a quote unquote tax professional put a fake child on your return. Okay? So, because this is not a bill, it's a proposal, you have the opportunity to agree or disagree with the proposed changes. And there's only a certain amount of time that you have to agree or disagree. So the first thing that you want to do is pull out your tax return that's in question on the CP2000. Now I'll let you know the IRS is slow, not stupid. So if you receive a CP2000, in addition to them being slow, not stupid, they are crazy behind, remember, because of all of the foolishness, I'll say, that happened with the IRS during 2025, with all the furloughs, then the government closed, and all of that. Okay, so they're behind. So it's possible in 2026 for you to get a CP2000 for tax year 2024, 2023. Okay, you want to make sure that you have the tax return that's in question on the CP2000. You want to look at what they are proposing the changes are. And if you agree with that, you're going to sign the CP2000 and send it back to them. Okay. Now, if you disagree, you're going to check the disagree box, explain why, and include supporting documents. I'll give you an example. I worked with a client who received a CP2000 and then adjustments were made to the account because they didn't come to me until about 3, 4 years after they received the CP2000, right? This is somebody in another state. I didn't prepare the tax return. What happened is from their merchant service provider, so who they use to run credit cards and everything, they issued them a 1099K. Okay. Now, their bookkeeper, they had all of the income tracked and reported in an income line. But what happened is on the tax return, there was no line item for that 1099K. It was just all included in income. So when the IRS system compared the return against the third party documents, it looked like the 1099K was not reported, although all of the income was accounted for. So even though they disagreed, they didn't provide the supporting documents to show, hey, we've already accounted for this 1099K. So as a result, they ended up receiving a bill and being assessed an accuracy related penalty because although they did not agree, they could not prove that the income had already been accounted for. Now, of course, that was prior to working with me, right? We couldn't respond to this notice because it was years after. However, I was able to get with a revenue officer who'd been assigned to the account and say, hey, I have all the documentation. That 1099K is valid, but the taxpayer did actually account for it, and here it is. All right, and still get that reduced. Now, if the taxpayer had been working with me initially when they got this, it wouldn't have gone to that point, right? So it's very important to know when you receive a notice that you follow all of the instructions that they give you. If you disagree, cool, but provide that supporting documentation as well. The next thing is when you read the notice, read it thoroughly because there is a deadline for you to respond to avoid further action. So, in the event that you agree, right? But you don't do anything. Oh, they'll make the changes if you don't respond by the date on the notice. But in the situation of my other client, where I told you they disagreed, even if they would have been with me initially and we disagreed and we had the supporting documentation, we still would have had to get that information in by a specific deadline in order for the IRS to hear us out on that and before it would get assigned to a revenue officer and they'd face levies and things like that, right? All of that could have been avoided if the person who was helping them respond to the notice would have read the notice thoroughly and followed all of the instructions. Okay. Now, when responding, you want to make sure that you use the method listed in the letter. Okay. For some, they are now allowing taxpayers to use the upload tool. My thing with the upload tool, it doesn't always provide you with documentation for a paper trail. So yes, this is going to sound backwards, but if it has not been assigned to a revenue officer, my recommendation is to send it via mail because you have the postmark there. And whenever you send something to the IRS, you want to make sure that you send it via certified mail because then you have the green slip of your proof of submission, right? And now we've created a paper trail so when you call the IRS and they say, hey, we can't find it, we never received it, you can say, bam, I have it right here. I know when I mailed it. Now, the thing with that, remember the changes to the USPS postmark rule that we talked about at the beginning of this year in episode 75. You want to make sure that your certified mail receipt is postmarked by the date that you had to respond. Okay. Otherwise, could be deemed as late and you may still have to deal with the changes and then getting them removed. Okay. Now, I know not all people are tax people, so I hope that this was informative to you and not overwhelming. You do have the right to representation when you receive a CP2000. Now, for some of you, you may just need guidance and to talk with somebody who's gone through something like this before. If that is you, there is a call specifically for you at bowenstaxsolutions.com where we will get together, you'll upload the notice for me, and we'll have a discussion to go over how you should respond, what you need to respond to make sure that it is done successfully. Now, there are others of you that are like, you know what? I don't want to deal with this at all. I need somebody else to take care of it for me. You can also book a call for that. Because you have the right to representation, you can hire a CPA, an enrolled agent such as myself, or a tax attorney to be your tax power of attorney and to respond to the notice on your behalf. Now, that person is going to work with you as a partner on your team, but you, for the most part, are going to be hands off. So I will give you a heads up that that is going to be a little more costly. Okay? So if you found the episode helpful, please make sure that you like this episode. It would do my heart good if you shared the episode, because you'd help me on my mission to fill the tax literacy gap one taxpayer at a time. But also make sure that you subscribe because maybe you don't need help with what I talked about today, but I'll be covering other tax issues that may speak directly to your situation. And even if you don't work one-on-one with me, remember, I just want to make sure that you still get the help you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.